The US dollar again asserted strength, having climbed to the highest level since May 2020. The hawkish rhetoric of the US Fed boosts demand for the greenback. The US Central Bank is ready to raise the federal funds rate by 50 basis points at a time in an effort to push soaring inflation down. Traders are anticipating the minutes of the last Fed's policy meeting, which are on tap on Wednesday. In the minutes, the Federal Reserve is likely to remind traders about more aggressive monetary tightening. Being aware of the Fed's agenda, market participants are poised to buy the US currency. And you're watching a video calendar on InstaForex TV channel, and let's discuss what events might influence market sentiment in the second half of this week. The economic calendar lacks important economic data later on in the week, so even insignificant news could change trajectories of currency pairs. On Thursday, Eurostat will report on consumer activity in 19 countries of the euro area for February. The annual rate of retail sales is expected to ease its growth. On the plus side, the indicator expanded 0.6% on month, which is bullish for the single European currency. However, the euro will find short-term support because the reading refers to February. The odds are that retail sales could have contracted in March due to the fallout from the hostilities in Ukraine and incredibly high consumer inflation. Speculators will show interest in the US dollar as a weekly update from the US Labor Department will confirm the health of the labor market. Week after week, initial unemployment claims print figures that sometimes are even lower than the pre-pandemic levels. Such news raises expectations of a sharper and faster rate hikes by the Federal Reserve, thus feeding the strength of the US dollar. The final day of the week kicks off with the news from Australia. Investors will get to know the financial stability review by the Reserve Bank of Australia. The Australian dollar advanced in response to the last policy meeting to the central bank. Even though the regulator put the key interest rate on hold ahead of the federal election in late May, long-term traders were pleased that the world patience was excluded from the agenda for countermeasures against the high inflation. Investors still hope that the Reserve Bank of Australia will again give priority to its major goals, the support of both full employment and inflation at the targeted level. In the late New York session, traders will welcome data on Canada's labor market. The market cheered up extremely positive metrics in the recent report. The unemployment rate in Canada tumbled to 5.5% in February from 6.5% a month ago. Besides, the number of employed people increased by a whopping 336,000 in February. No doubt such robust hiring came as a result of removed COVID restrictions. And this time, analysts project modest figures in the report for March. Nevertheless, the fresh metrics will confirm healthy conditions in the labor market. The Bank of Canada has already embarked on the cycle of monetary tightening, signaling the next rate hike at the nearest policy meeting. So, with the new evidence about the resilience of the Canadian economy, traders will have an excuse to buy the Canadian dollar. You have watched the Forex Trader Calendar on InstaForex TV channel with me, Kate Stichina. We wish you profitable trading with InstaForex.